Good morning. It's Wednesday, August 9th, about 6 a.m. Central Time. Look at the precious metals overnight. They're slightly weaker. You got gold down $1, $19.58. Silver's down 5 cents, $22.75. Copper up 3 at $3.80. And platinum's down $5, traded at $8.99. So yesterday I gave a shout out. I thought that platinum futures, and I also mentioned the seasonal weakness that I believe that platinum futures would drop below 900. Here they did, and they confirmed that. So we'll look for some bottoming action somewhere in there. We're going to have to monitor some of the developments that happens over in the producing regions where platinum is made. So overnight news, you had some economic data come out from China, deflationary data. You saw falling prices. They're adding more pressure. There's more rhetoric, more, the beat is rumbling here that they are going to try and provide some monetary fiscal support. It was their CPI. It registered one of the first drops in over 2 years, falling 0.3% in July from a year earlier, and also producer prices fell for the 10th consecutive month, contracting to 4.4%. So what happened? You saw copper futures get some volatility there. Big move up here on the copper market. We got up on that December contract, 385. On the September contract, 382. So we got a little bit of a pullback on that, but that's about it. I think it's some overnight weakness here. Other news here, the dollar index slightly weaker, not a lot of activity there. And I think gold and silver are really waiting for, you got your CPI, you got your PPI in the US. We'll have to look at what the expectations are on that. I believe Bill Baruch, he'll put out a special video on that ahead of the number, and then also look at what initial claims will do. So if you look at some of the chart patterns here, you got the gold market sitting right at 200-day moving average, silver decisively below it, copper futures also below it. That 200-day moving average about 388 here, 388 on both those contracts. And then again, platinum futures well below that, but it is testing that July low, that kind of, it's forming, looking for a double bottom there. So remember, we got a seasonal buy on the gold market, August 11th to the 28th, but that doesn't necessarily mean that prices are going to go up on there. Always use seasonal analysis as like a secondary confirmation to what your primary thesis is. So we need to really get some of this economic data breaking down. We need to get the futures market going up on a channel, and then you have that seasonal tailwinds behind it, and then prices really go higher. So I still see on gold 2000 being your first level of resistance, really 1988 below it, and then on the front month, which is December, I think 1951 is kind of a key level of support. I think 1950 is that bull bear line. So other markets, other things that are notable, you did have a big build on API. We will have the EIA data coming out. However, that crude oil market able to shake off a little bit of weakness after the number, and we're pushing up here. So front month crude 83.50. That December contract sitting at 81.75, and the grain markets overnight little bit mixed here. You got a little bit of weakness here in the wheat market, and then you got corn unchanged and soybeans up just a touch. So you got any questions? Give me a call. Love to talk to you. 312-858-7303. Remember, futures option trading, vol risk of loss may not be suitable to all investors. Good luck, good trading.